Hi, I'm Kerry Greenwald, Senior VA Loan Specialist from Creekside Mortgage. I'd like to take a moment today to talk to you about bi-monthly payments. You'll be solicited those quite often by the bank that you currently hold your loan with or at the time of going through and originating your loan. I've always been a strong opponent of bi-monthly payments. What happens when you do a bi-monthly payment? They'll attract you with the notion that you'll take off anywhere between 3.5 to 4 years off your loan by making a payment twice a month or every 2 weeks, which comes out to be 26 payments per year, which basically you're just paying a full extra payment. In the end, that's why you're escalating, you're speeding it up. Most banks will charge about $400 to set that up, in some cases $5, and typically $2 to $3 to $4 each time they take a payment out, kind of defeating the purpose of that cost for you to go through and do. Plus it more than doubles your likelihood of having an accidental late, non-sufficient funds one time, or an event happening out of your control, and that's where banks make that extra money on those non-sufficient funds. So I advise going through and doing that. If you want to escalate or speed up your loan, I would just add an extra $100, $200 to each one of your payments each month. You'll basically be accomplishing the exact same thing. But I tell everyone to take a moment, take a calculator out, do your own calculations on it. If you're paying an extra few $100s every single month, you're in a loan for under 4%. Your objective is trying to pay that loan off at a quicker rate. Do you have all your other debts taken care of? Do you have no credit card debt? Do you have your savings completely saved up? Kids' college funds, retirement accounts, everything else paid off, no car debts or anything else, then it makes sense to go through and accelerate your loan. But if your loan's under 4% per se, speeding it up is probably not necessarily the right thing to do unless you have all those other things taken care of. But I tell people to take that calculator out, take $200 every single month times 12 months a year times 5 years, 10 years. If you can maximize putting more money into your 401k or putting more money into other assets, it makes a lot more sense. I know people sitting behind this desk or in the banking industry would rather you accelerate your loan, pay things off, because they know when you need money, guess what you do? You go back to them to get money again. I always say if you could create your own savings account or an asset you could go through and borrow against yourself versus going back against your house, it's actually a smarter option. So these are just my opinions. I ask everyone to do their own research on it, but just be very careful when you start getting the bi-monthly payment things in the mail. My old saying, if it's too good to be true, guess what? It's not true. Hey, have a great day. Any other questions, always refer to us. We have a link on here, our email, our website. You can always send us a note at any time, and we'll go through and gladly help you. Thank you.